Welcome to Drill Down Earnings. We've got the latest results from Lumen Technologies. This is the business story about one stock on a move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We cover the 50 most important companies in technology. And this is a new one to our list. I won't tell you who we kicked off, but and this is also a bias note. I don't give stock advice. I'm not giving investment advice. I only own 10 stocks, and this happens to be one of them. And I think it's a really important technology company. I'm going to show you why I think this is a company worth watching. Again, this is not investment advice. Just want you to know what my bias is. Their Q3 numbers were a little bit better than Wall Street expected, $3.09 billion in revenue, and they lost only 20 cents a share, better than Wall Street expected. So I show you usually these charts of companies where the numbers are up and to the right, but Lumen lost only 4% in revenues on a year-over-year basis. Revenues are going down and going down and going down and going down, but wait, there's more. This is an interesting company that is changing the way that they do business, and they're changing what they're offering here. And so while their revenues are falling and their losses are substantial, though they had a lot of nice free cash flow, this is a business that is changing. So what is Lumen? Lumen is the business that once upon a time was CenturyLink, the Seattle-based company. Remember CenturyLink Field, where the Seahawks play, is now called Lumen Field. Parts of it used to be Quest, used to be a bunch of different telecommunications companies all over America, really, in the South and in the West. But these guys went from a declining business in offering telephony, fiber optic transport of data, to a business that they think has terrific opportunities in the world of artificial intelligence. So let's dig a little bit deeper. They sell to businesses, and they do a lot of work giving telephony and data services to businesses, as well as their mass market segment, where they're offering telephone service to people. They've got people out there fixing wires and offering internet service and so on. That's not a great business, and that business is shrinking. So what do you do when you have a shrinking business? You try to build another big business on top of it. And that's what these guys, to me, it looks like they're doing it. I'm going to show you the numbers and let you decide for yourself. But their revenue, $3.09 billion in revenue, down only 4% year over year. Their operating profits of $787 million was a nice 26% margin, even though they had some losses with some adjustments after that. So their big business unit, almost all 80% of revenues, that's kind of stabilized. It's down 3%, but the declines are shrinking. The shrinkage is shrinking. I don't know. The shrinking is shrinkage? Whatever. Their mass market business also shrinking, down 8%, but maybe stabilizing a little bit in sort of the pace of those losses, kind of 8% on a year-over-year basis. They are spending a ton of money to build new fiber routes for the use of AI and a new kind of thing they're calling networking as a service, where they're going to make it simpler for businesses to get the networking that they need for whatever they might need it for, but certainly for things in AI, where they'll have some devices and services where essentially it's just plug and play. You don't have to spend a lot of time provisioning all these new services and getting permission from the telecom itself. They're making this a lot simpler. They're selling it as a service. It's really interesting. It also means a lot of new fiber. We did a big study at Epistrophy Capital Research. We found that 42% of all the fiber that's in the ground that has never been lit never will be lit because it's damaged or it's dark, what they call it, known as dark fiber. Lumen's got good dark fiber that they can light, and the need for new fiber. They've laid 3,200 new miles of fiber in already this year. That's 130% of their target for the year. And it's supporting an AI-ready backbone that is really fast. 400G. In the future, it's going to have 1.6 terabytes of internet capacity. The speed at which these things can move is just, it's faster than the connectors right now that connect to these systems. So it's a really interesting business. I want you to think about their business in a different way. All right. So I mentioned they've got some old businesses they're going to get rid of, or at least watch grow more slowly. There's some they can kind of nurture and keep kind of around. They're not worth killing, but they're not going to grow much at all. Then they've got a big business that's going to grow. So they characterize these things as these three things: grow, nurture, and harvest. And in this quarter, grow was 51%. For the first time, the businesses that they think will grow was 51% of their overall revenues. With the business they're going to harvest at 22%, just take the profits from that. That's not going to do very well. And maybe they can nurture 27% of their business. So they talked about a lot of different products there that were doing okay. So their growth business is growing. Good. It should at 8% on a year-over-year basis. Their nurture business is cooling off at 16%. That's not a good business for them. They're going to see that disappear slowly over a long period of time, or at least get to a point where it's not that important. And they're harvesting that business. That's those declines are declining, down 10% on a year-over-year basis. But that business is not shrinking anymore, and the rest of the business is shrinking. And so the growth within their business unit is coming from their grow unit now at 51%. And I think that's a really important turning point for this company, because they've got these other services. Like they've got a thing called Project Berkeley. They're going to have it early next year. And it's think of it as like a box, like a server that's going to be on-premise, cross-carrier fabric port. It'll be pre-provisioned, so companies can just say, we want access to these services, turn it on, and it's on. Third-party services like Internet on Demand, a VPN on demand, security services from Lumen Defender they call it, all on demand. Just turn the thing on, and with every port that's turned on, Lumen gets more revenues. Really interesting product coming next year. The market liked these numbers. The stock was up at last 3% in after-hours trading. It's up 55% in the last year. Sadly, I've not been there for all that, but nice move in the stock in the last year. CEO Kate Johnson, I think super impressive, not just because she's my sister. Not really. We're not related at all. But, she's the extended Johnson family, surely in some way. She's very impressive. And what she talked about is taking this old telecom company with liquidity problems and too much debt, maybe even facing some sort of existential capital problems, has really made a turn, and it's made a turn to face AI for the opportunity that it is. Here's Kate Johnson.
We're building critical infrastructure for the biggest technology shift in the history of mankind. So it's a multi-decade journey. I want to be clear that it's not, linear. So phase one will overlap with phase two. Phase two being as enterprises, start to use all of these models, which is happening right now. I think that it's really interesting to see the proliferation of neoclouds coming into the story to sort of offload, a bit of the, of the pressure on trying to find GPUs and commit to buying them. So I think you're seeing the market change, and I don't know that anybody knows the answer or how long this is going to last, but right now we're just focused on executing. And it's, obviously, we're delighted with the commitment of capital that our partners and customers are making to this incredible technology.
So Kate Johnson, delighted, and who wouldn't be with these numbers that look like they're turning in the right direction. Again, the numbers are down, but I think some things are pointing in the right direction. This is going to be an interesting one to watch. But what's your big drill down earnings takeaway? I know I've told you a lot here. And the one number that tells us a whole lot, your drill down earnings bite. Well, I've got that. But please subscribe to us, follow us, and catch all of our broadcasts that we create here from Epistrophy Capital Research. We write research reports. We do advisory work. I go on a lot of media and talk about business and technology a lot. But to do these reports, we need you to subscribe and follow us so we know that you're watching and listening to us for our future. But our takeaway on Lumen Technologies. So Lumen just reporting Q3 numbers, your essential summary, your drill down earnings takeaway. Remember, I own the stock. This is not investment advice. I just want you to know that I'm biased here. Why else would I be so excited about a company that's showing 4% decline in revenues? But yeah, there's more to this story, because a lot of the things that they're doing, whether it's laying 3,200 miles of new overpull fiber, well more than their target for the year in 27 routes all over America. They're setting up a network for AI. They're building devices so companies can plug into these AI networks as fabric, networking as a service. No one's ever seen anything like this before. It's really interesting. And they're growth businesses, not the businesses that they're harvesting for kind of keep them around with a little bit of revenues and a little bit of profits, not the businesses they're nurturing to get a little bit more profits, I said, but their growth businesses are now more than half of their business revenues. 51% of the business segment revenues are now their growth businesses. I think it's an inflection point for Lumen Technologies. We shall see. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.